This is the Let's Get Real Estate Show with your host, Danielle Chason.
Full-time investor, strategic consultant, motivational coach, sought-after speaker,
and host of your #1 real estate investing show, Let's Get Real Estate,
where real people are doing real estate.
Hey everybody, it's Danielle Chason here, and we're back with the Let's Get Real Estate podcast. And this is where I bring to you real people doing real estate. And today we have Thomas Lorini in the house. Woo woo, Thomas, welcome to the show.
Awesome. Thank you for having me, Danielle.
Yeah, I'm excited about our topic today because it's a hot topic for Canadians. So for the listeners that are the Canadian listeners, this is going to be really interesting today because you are a Canadian, natural-born Canadian citizen that is now living in Southern California and investing in the U.S. and doing mostly all of your work, all U.S.-based. So before we dive in, though, how about you give us a brief synopsis about where you were and how you came to be where you are now? Because, I mean, you didn't...
Sure.
You didn't one day graduate from high school and said, I'm going to go invest in the U.S. and move down there. So tell us the story.
Absolutely. Well, again, thank you for having me. So quick synopsis of my story. I'm born and raised in Toronto, went to school for mechanical engineering, was in the manufacturing field for many years. And my initial experience with real estate was just buying a house, like most people. So I bought a house and I quickly realized a 3-bedroom townhouse was kind of too much of a home for a single guy. So I rented a basement. And that was really the first step of being a landlord. And I kind of like that, right? Having someone subsidize my housing cost. That tenant basically paid for my mortgage and allowed me to save some more money. But the reality was no one in my immediate circle, friends, family, colleagues at work were in real estate. So I wasn't in an environment to really understand how to level up and grow and continue on this path of real estate. So I just continued to, work and save and invest in the stock market, mutual funds, like many people. But there was always this inkling of I'd like to get more into real estate. Read the books, went on YouTube, but again, there just wasn't the support system and real education that I needed. And it really took me joining a group. This was going back to about 2011, joining a group and getting the education and the support I needed. So within months of joining that group, I bought my next property, which was a duplex in Hamilton. And that really was my step into the real estate investing world. And from that, I just continued to, grow a portfolio of properties. And for me, it was a slower growth. I just did everything self-sufficient, either savings or refis. And it really was the decision for us to move to the US, which really kind of changed my world. My wife's American. So after 5 cold winters here in Canada, we decided to move to warmer climates. So we've been living in Southern California over the past 10 years. And that transition got me out of the manufacturing and engineering world and allowed me to make a decision. And that decision was to get into real estate full time. And basically, I started getting into land development because I was fortunate enough to start working with my father-in-law, who's a builder and developer. So I learned that side of the business. And we've got several projects that we work together and allow me to get licensed down in, here in California as a realtor. And then I've been investing again. I continue to invest in Canada because I created such a great portfolio and contacts that allow me to just partner up and get into more and more deals. But then, of course, being on this side of the border, I decided to start investing in the U.S. California, Southern California, very similar, environment to Toronto. It's a high-priced market. So at that time, I looked for other markets that were more affordable, and it took me to other states. So I was quickly able to get into markets where the price points were very attractive, cash flow was very prevalent, and started to acquire properties in other markets. And now fast forward to today, I've got my own private investing firm called Ventureco Capital, and grown a sizable portfolio. This year alone, I've acquired 108 doors in Ohio, under contract to close this month on 149 units in Texas. I've raised the capital. We're hoping to break ground on a new build here in California on 172 units, and coaching students and all that. So I've really kind of made real estate investing, my thing, and it's been a blessing to be able to help other people. And kind of ended off, on the coaching aspect. I've really taken that over the past year and helping predominantly Canadians invest in the U.S.
Yeah, and that's a huge trend right now, I think, with COVID and what happened with COVID. It's really allowed people to be able to work more remotely. And I think there's more and more Canadians thinking, hey, maybe we want to do what Thomas did and head down south and live down there instead of living up here in the cold winters. And I'm going to tell you, the weather is turning and I'm not very happy about that right now. So I'm one of
I
those
feel
people.
I feel you. I don't miss shoveling the snow and warming up my car in the morning. I'll be honest.
Now, there's a trade-off to everything though, right? I mean, you got to deal with some earthquakes and pretty scary stuff for Canadian down there. I don't know if I'd want to have to live through a bad earthquake, but
Well, funny enough, living here 10 years, sorry to cut you off. I mean, I haven't experienced any earthquakes, but fires here are pretty prevalent.
right.
And it's just the climate, different times of the year, very dry, and it's a thing. So thankfully, where we are in Orange County, hasn't really affected us directly. But drive out an hour, 2 hours away, some areas have been significantly affected by the forest fires and just fires in general, just because it gets so dry.
Yeah. And you know what? I'm going to tell you this too. As an investor, the first thing that pops into my head is like, how is that going to affect my properties? And how do I deal with those issues or problems if they show up too? Right. So something to consider
Mhm.
too. And I'm sure it's something that you talk about with your students when you're coaching them on investing in the US and different markets and understanding the quirks of those markets. Because if you're going to invest outside into a new market that remotely that you're not familiar with, I'm sure there's lots of things to consider that you have to be aware of. So before we get into that though, I just want to circle back with something that you said earlier about, joining a group. You'd bought one property and didn't do anything for a while. And then you joined a group and within months you bought your second property. And I just wanted to highlight the power of community and what you see the benefit in that, because with the coaching, I know you're part of a group now, you do your coaching with that group, and the power of community can really help elevate people. Would you agree with that?
100%. I remember walking into the first meeting in that group, that I spoke to someone and they're like, yeah, after a short while, he said, I only own 6 properties. And I'm like, only own 6 properties? I'm coming from somewhere. I own 1 property, have 1 mortgage. That's stressful enough. And you're telling me you only own 6 properties. So I was like, all right, if that's what I'm hearing the very first, few minutes I walked into the right environment, this is the place I need to be. And that's what I kind of encourage people to get into rooms where people are doing the things you want to do, that doing bigger things, better things that you want can help you to grow and elevate and push you. And yes, most of those environments you're gonna have to pay to be part of, but don't allow that to be the prevention from taking that next step. Like we pay for education and so many different things. So this is really an investment in yourself to help you kind of grow, get the support, build your power team, and kind of help you to kind of like keep you accountable and push you along type of thing. So I'm all about coaching and being in the right rooms and being around that support team.
Yeah, I was at a mastermind and one of the speakers who I'm really good friends with now said something that really impacted me. And it was, shake the hands of the people you want to become. And you don't get the opportunity to shake the hands of those people that you want to become if you don't get into the rooms and get really uncomfortable. And so kudos to you for doing that, because it's really hard to get into a room where maybe you're at the bottom of the totem pole, right? It's really uncomfortable, but You have to get uncomfortable in order to grow. And kudos to you for doing that. And look at you now. So just want to tip my hat off to you and give kudos to that.
Yeah, and I appreciate that. One more thing I need to add is like you never know whose hand you're going to shake, and it could be a future partner. It could be someone that wants to invest, give you money type of thing. They may have a deal that you could potentially get involved in. So there's so many instances where I'm networking and meeting people where down the line, 6 months, 12 months later, we're doing business together. So there's just so much benefit of getting those right rooms.
100%. Yeah. I mean, I can attest to that too. Now, having said that, though, let's talk about, and maybe we can even incorporate like getting into the right rooms when you want to invest into the US. Now, a lot of Canadians are liking the US because there's a buzz right now, as you know, Thomas, about the US and US investing, and the numbers work better and going down there. And the price points are a lot lower too. It's very difficult when you're in California or New York or Toronto or Vancouver, and you want to invest in the urban areas are really priced out, but the US has a lot of markets to choose from that have better price points. So what do you tell a Canadian like myself that says, look, Thomas, I don't really know what I'm doing. I want to invest in the US. I got a little bit of cash, and I want to start investing down there in real estate properties. What's the first thing that you tell them?
Great question. I mean, first, they need to be informed. And I help them understand and give them some kind of a starting point. Number one, Canadians are the largest foreign investors in the US. So it's not like we're reinventing the wheel. It's happening. So now, what do you need to know to get you into that game ultimately? Too often Canadians, they start looking at properties or they take a trip down there and they see something, they want to make an offer. I tell them that's really step number 4. You really need to take a step back and understand how to structure yourself correctly from a taxation standpoint and an asset protection standpoint. Because starting off on the wrong foot can set you back significantly. And then after that, it's really looking at what are your financing options. And to me, financing is probably the biggest challenge for foreign investors like Canadians. So there are options available. There are some limitations on financing for Canadians, but there are paths that I recommend and coach people down. So again, for people who are considering it, absolutely. And there's never been more interest and awareness for Canadians to invest in the US as there is today. I mean, again, I've been living for 10 years in the US, investing in both sides of the border. Over the last year and a half, I've never had more people reach out and say, hey, I'm fed up with Canada. I'm done. I want to move to the US, somewhere warmer, somewhere where, the political environment is just more conducive in line with my beliefs. They're just tired of the LTV and the system in Canada for landlords, which I get because I still own properties in Ontario. And they want to explore that option. And I mean, great. So the next step is, why even consider the US? Well, number one, I think most of us know that the US is a larger market. The US is literally 10 times the size of Canada. So you've got from a population standpoint, more people will equal more opportunities. I test people. Go on to realtor.com and go on to realtor.ca. Search for like a 30 or 40 unit apartment building on either platform. And you'll see, just from the opportunistic standpoint, how limited you are in Canada. The entire population of Canada is less than California, the state of California. All right. Just to kind of give a context for people, how small Canada is. It may look large, but it's really small. And you're really limited to a few pockets across the entire country to invest in, where the population really is. And in most of those markets, you're playing in an unfavorable environment with the landlord laws. So I premise that and then help them understand it's not like that in the US. Number one, the US is a much more capitalistic environment. The US is much more pro-business. So they've got so many rules and systems in place to support entrepreneurs and investors, from savings and taxation, different programs. Uh, I mean, that whole conversation, just from a taxation conversation, we can kind of do a quick comparison. But there's some programs and opportunities from the 1031 exchange where you can defer taxes indefinitely. So there's that element. Then you've got plenty of markets which are landlord friendly. And I don't think many Canadians understand what that really means. We're so used to kind of like going to, approaching an opportunity and calculating how much cash for keys and trying to plan out how long this particular apartment will take to burr. It's very unpredictable in most parts of Canada versus many environments in the US where you have the control. If the tenant's not paying rent, you can evict them within days. You can provide notices for non-renewables within 60 days. So you have a much more predictable product and plan when you're operating as an investor in the US. And in terms of like affordability, that's another huge component. The average home in Canada is around $800,000. Compared to the US, the average home is about $350,000. So just from an affordability standpoint, you're playing in a much larger sandbox and a much more affordable sandbox. And there are plenty of markets where you can acquire homes. And I'm using homes just as a blanket kind of thing, that you can find homes for under $200,000 in many markets across the US. So again, those are probably the first main things I want to inform a Canadian exploring and considering investing in US. Number one, yes, consider it, look into it, understand that you can do it. Number one, you just need to know how to structure and set yourself up. Line up yourself with people who have done it and it can help you get there. And then in terms of the opportunities and landlord and affordability, that will already kind of set you significantly ahead in trying to do the similar thing in Canada.
Yeah, and not only are the homes more affordable, but you can also have really strong rents. So, like the ratio of rent to mortgage payment is way more attractive down there than it is here. Whereas, here you might not even be cash flowing for most properties that you're walking through. Whereas down there, not only are you cash flowing, but it's a healthy cash flow and you can afford to pay your accountant at the end of the year, which in Canada, here, you're lucky if you can add that on. Otherwise, it's out of pocket, right? And so I think the ratios are way, way healthier down there as well. Would you agree with that?
100%. I mean, we talk about calculating from like a 1% rule perspective, where a monthly rent is 1% of purchase price. I mean, that ratio is virtually non-existent in Canada. If it is, it's some small town in the middle of nowhere type of thing. But trying to find a deal in Canada or a property in Canada where the 1% rule exists is very difficult. Versus in the US, plenty of markets. There are markets where example, like, you could buy a home for $150,000 or rent are $1,500. I mean, those opportunities are plentiful. I'm working in an environment where we're reaching actually 2% rule. So I'm acquiring apartments where we're acquiring them for $48,000 to $50,000 a door, and rents are $1,500 a month. And those, I mean, when you're working in something like that, I mean, not only are you going to be cash flowing, but the returns for investors and the buffers that you can add, and just from the combination of the cash flow and also appreciation, and just so much more advantageous compared to Canada. So absolutely, there are many markets and cash flow is plentiful. But again, you got to know where to look and how to look at the opportunity. And in some instances, you're really creating the opportunity.
Yeah, and I brought up the cash flow only because since COVID, I mean, most people that were investing, especially here in Canada, the mindset in Canada with the appreciation going out of the roof where it was, where people were like, oh, it's okay as long as I break even. And they really didn't put much value on the cash flow. And now that they've seen how quickly the tides can turn, cash flow is what's going to help you ride out any storms. And if you don't have that cash flow, you can get into a lot of trouble. And there's a lot of investors right now that are in a lot of trouble. And so looking at markets that are better balanced, where you have some appreciation and some cash flow, is really what's going to keep you through to the long game, right? So I just wanted to mention that. Now, the big question is, how do I do this, Thomas? If I want to go down there and I want to invest in the US and I want to do that, and I'm a Canadian, and I know you teach, I mean, you're coaching students in the US how to invest also in the US, but the rules are just a little bit slightly different. There's a few things that we need to do different as Canadians to be able to structure you have to have the corporate structure well in place so you don't get double taxation and other stuff. So how do I set up the structure? Maybe just high level, if you can walk us through that, so that then
Sure.
I can go down there and start vetting markets and looking at properties.
Canadians definitely need to have a good cross-border accountant and attorney. Those two individuals will really help you set yourself up correctly. Everyone's situation is differently, so there's not a one size fits all. In some instances, it makes sense for the Canadians to invest directly into a US entity. Other times, it may make sense to create a holding company in Canada, which invests, or a multi tiered structure where you've got a holding and operating company in Canada, and then you're creating an entity in the US. Again, the taxation consideration combined with the asset protection is really what you need to understand. Most people don't want to pay double taxes. And in most setups, that is negated because of a treaty between Canada and the US. You get credits if you are investing directly into an asset in the US where you're required to file a US tax return, then you will have to pay taxes, but doesn't necessarily mean that you're going to be paying double taxes. If it's set up correctly, the U.S. would get first dibs, and whatever's left over based on the tax bracket you are in Canada, then Canada would get whatever's left over. So again, if you're in a 50% tax bracket in Canada, you may end up paying 50%, but 30% may go on to the U.S. and 20% to Canada. If that makes sense. So there's so many different ways of setting this up, and all depends on also your strategy and the type of investments you are doing in the U.S. Are you flipping in the U.S.? Are you buying and holding? Are you doing it on your own? Are you partnering with individuals? Are you partnering with Canadians? Or partnering with U.S. residents? There's just so many different factors to consider. But once you understand, and then it's really setting it up, and now it's in place. You've created the vehicle. And then the third consideration is really the gas for your vehicle, which is the money. Is it going to be self-funded, or is it going to be money that you have to raise, or is there a financing component to it? And again, as foreign investors, you are limited. You are a foreign entity to the financing system in the U.S. You likely have no credit, no history, no tax returns on the U.S. side of things. So there's higher risk. So what happens in that scenario? Well, you can start, what I suggest is two paths for my students. Really, it's a slow and steady, where between 1 to 4 units, there are off-the-shelf products for foreign investors. And usually they're a little higher interest rate, a little bit more down payment, but they're literally designed for Canadians. So my suggestion, if you want to go slow and steady, do 3, 4, 5 of those types of deals. Get into 2 to 4 unit properties, a few of those, build a track record. In about a year to 2 years' time, you have a portfolio in the US, you likely have a tax return, and you likely have some credits. Now you've got a much larger file for the lender, and you most likely build a relationship with the lender to go to them now and say, well, I want to level up. I want to get into some multifamily. I saw this great 30-unit building in my market. I'd like to be able to make an offer and take it, and acquire it with some financing. Well, again, for them, they've seen what you've done. You've got a track record and so forth, all these other elements I just mentioned. So it's a lot easier. The risk factor has been significantly reduced. But for some investors, that's too long of a game plan. I don't want to wait 2, 3, 4 years for that. I want to get into some multifamily today. Well, again, unless you're going to be putting a significant amount of capital into these acquisitions, the alternative is to partner with some Americans and some experienced Americans. And that will just basically allow you to kind of go to level 4. You kind of bypass all the stuff I just mentioned, and you get into larger deals straight off the bat. And the added benefit, if you're partnered with the right individual, they most likely have all the financing, set up. They most likely even have the deals. So you're kind of going into an environment where your participation is not that much, and you get into these larger deals. And in addition, you get into a few of those deals. Now go back to your Canadian network and say, hey, look what I'm doing. I just got into a 300 unit deal. I got into a 150 unit deal. So within one or two deals, you're like, oh, I own a portfolio of 400 doors. And you're like, and people back in Canada, like, what? How did you do this? Right? You just started. You've only been investing in the US for a year. Well, again, strategic partnerships. I'm all about strategic partnerships and relationships. So, and then these are really the two paths I guide my students. So networking and vetting, U.S. operators and stuff, building those relationships to get into those deals can really help you kind of grow and to be able to kind of create a portfolio in a much more reduced time frame and to get into larger deals and potentially better deals.
Yeah, that's a lot for the audience to take in right there. So thank you for that. But ultimately, it's not as scary. What Thomas is saying, it's not as scary as it really is. I think going out there, getting educated, getting the guidance from someone to help you map out your blueprint to get the work done. You set up the structure, and then once you've got the structure set up, now you go down there, figure out your financing. I mean, that's the biggest key. And I think that's one of the biggest mental blocks that Canadians have going down there. The structuring has nothing to do with you. Just hire the professionals. They're going to do it for you. But the capital, you have to go and get yourself. And that's a little bit more scary, I think, for Canadians. So one thing that I have heard, and I mean, we hear it up here too, but it looks a little bit different up here than down there, but it's the asset-based lending. And there are quite a few American firms now that lend based on that. So can you talk a little bit more about what this asset-based lending is and how Canadians can capitalize on that? And I'm only bringing it up because when I was looking at investing in the States back in 2009, when everything was crashing, I was actually shopping. No, sorry, it was 2010 when I was shopping down there. And it was literally next to impossible for a Canadian to get financing. And now banks are lending to Canadians, but it's just structured a little bit differently. So could you talk a little bit more about that? Because it's way easier now to get financing for Canadians than it used to be.
It is easier, but also the environment has tightened up recently based on the overall kind of, global economical, situation. Both Canada and the US have raised interest rates considerably. I do want to mention, most Canadians may not be aware that in the US, Americans lock in their rate for 30 years. So unlike Canada, most people only lock in for about 5 years. So the high interest rates do affect Canadians much more than Americans. What we're finding is that Americans tend to just, not want to move and just stay put for just longer time and just wait, they'll just wait this whole situation over the next few years until rates drop to potentially move. I say that because that plays into the whole financing world and how lenders operate. So again, financing in comparison to Canada, there are over 4,000 lenders in the US compared to Canada's about 32. So just from your options, I'm always building relationship with lenders and connecting with them because there's all kinds of products and opportunities that are coming up that you just don't know. So the more you network, the more you build those relationships. Someone refers you someone. I'm always open to different options. And in addition, and again, along with this conversation on financing, lenders do lend on the value add. So in most instances, we won't just get an acquisition funding. We'll also get funding for our renovations and improvements. So you have a combination of loan to value with the cost of improvements, which factors a higher average loan to cost wise. So why is that important? Well, because then you have to just put in less of your money, use more of the banks. But in terms of Canadians specifically, yeah, there are plenty of programs in terms of asset based. There are programs which are non-recourse, so They don't personally, you don't have to necessarily go after you personally. However, it needs to be, the right deal. The numbers need to be, the property needs to make sense. I just secured a financing for one of my apartments recently through Fannie Mae, Freddie Mac. Um, these are federal backed lending institutions similar to CMHC in Canada. So you get the best rates. It takes a longer time to secure these financing options, and they've got a lot more involvement. They take months, again, similar to CMHC in Canada. But you tend to get the best rates, best terms. And in those instances, like for my particular financing, I was able to secure 5 years interest only in the sixes in this current market environment where rates are over 8, and for foreigners, you're in double digits if you're trying to secure financing on your own. So again, I know I'm not a lender per se. I've got plenty of experience, securing financing for me and my partners. But this is where the conversation comes down. DSCR has changed. The type of amount of cash flow the property needs to produce has changed in the last short time. So the property needs to make sense, and that's why these markets where you mentioned cash flow. This is the time where these products make sense in those markets. The risk is higher for lenders, just where we are overall with the market. So because of that, they're going to look for, safer bets. So an environment where you can acquire something that's potentially cash flowing off the bat, it's going to definitely help. Higher upside, in terms of ARV, that's going to be, make more sense for these lenders to lend on. But even for myself, like loan to value, I mean, you can't anticipate you're going to get 80% loan to value. Even those scenarios, even for Americans, are pretty much dried up. So that example I given you, this was about a month ago when I secured that financing. It was 65% loan to value. So again, you can see the lenders, they want more skin in the game. They want to buffer the risk, and if you want that good rate, they're going to want to make sure that from how much money you put into the deal, the experience level, and they do a thorough background check. They're actually checking your property managers out. They want to know the experience level and have your property managers sign off on their experience and the number of units that they own and so forth. So definitely, there are some differences, but more options. There's always more options in the U.S. compared to Canada. If someone says no, we don't stop there. I mean, Canada, if TD says no and you go to Scotia, it's most likely going to be a no. They all kind of operate very similar. Unlike in the U.S., again, there's more options, just continues to kind of search and build relationships with various lenders and, just higher probability of success in general.
Okay, so here's where my mind is going, and my audience is going to be like, what the heck, Danielle, seriously? But, you're saying more options, and the American financiers, they obviously they prefer Americans. And so like here I'm thinking, okay, well, if there's more options, I should go down there and like, I need a green card so that I can open up more options for lending down there. And to get a green card, then I might have to get married. I might have to find myself an American to marry down there. And heck,
that's what I did.
Right? And then there's more options too for men down there. So maybe I should be heading down there. But yeah, all kidding aside, there is a lot more opportunity down there. There's no doubt. And just based on the numbers, and real estate is a numbers game. So now we talked about like how to do it, how to structure it. Where you're going to get the financing. So let's talk about, and you touched on who to work with, who to partner with as far as helping with getting that financing as well. Because if you do have an American on your team and they're qualifying as well with you for the mortgage, that's definitely going to help you get a stronger file 100%. And so you can expedite the process. But let's talk about where. Where do you invest? Because when I look at the US map, Thomas, it's huge. It's huge. And there's lots of opportunities. Like you said, there's a handful of places that we can invest in the States or in Canada here. There's small pockets across our vast country, but in the States, I mean, again, there's just way more options. So where do you start and how do you know where to go?
Great question. I always premise this question that people are making money and losing money in all 50 states. So I don't pretend to say don't invest in like Alaska, because I'm sure there's plenty of people making money out there. Now, when we're looking at data and we start stacking up all things like landlord friendly, low tax, and all these different elements, certain states tend to kind of rise to the top. So there are certain markets which you'll find on most searches, which tend to be higher up in the list on top markets for investors to invest in. Why is that? Well, most likely there's job creation, people are moving there. There's lower taxes. There's better landlord laws. So combining all those elements, the states that tend to kind of rise to the top are Florida, Texas, Arizona, North and South Carolina. You also have places like smaller markets like Arkansas. Um, so that's kind of like a blanket statement, right? And those are markets where a lot over the last like 10 years, a lot of capital has kind of gone into, and a lot of operators have been heavily invested in those markets, which is good. But now we are in we're in a different climate with the higher interest rates. And I've went to Florida 3 years, an example, the last year 3 times, looking for opportunities, and things are gonna make sense for me. Markets where you're traditionally in a 4 or 5 cap, where interest rates are like 8, it doesn't make sense. It doesn't pencil out. So it's funny enough. I posted about this about a week and a half ago. The Midwest has become one of the strongest markets in the country, mainly because of this cash flow affordability standpoint. The Midwest is not necessarily a sexy market. When we hear Pittsburgh or Cleveland or Indiana, it's like, okay, smaller hick towns or just farmers. Like, who knows what kind of connotations come to it? Rust Belt. But this is the whole thing. These environments which weren't getting as much attention, and the Florida and Texas have been over the last 10 years. Like, now we're seeing these markets make a lot of sense. And that's why I've been focusing a lot of my attention in these markets. And that's what I would recommend my students and people to really consider. These are markets where you can still find, again, units for like $50,000 a door, going in with average rent $1,000. So you're making strong cash flow. The metrics make sense. These are markets where the going in cap rates are eight caps. So an environment where interest rates are around 8%, things can pencil out, especially if there's a significant upside on these products. So that's what I'm going to recommend and suggest people to kind of look into. But I'm doing a deal here in Southern California, rent control, very expensive, but it's a new construction. We control the cost, the product, we control the tenant profile and the rents. So again, a lot of this is based on the dynamics, the opportunity, and so forth. So here, because of that, it makes sense to get into a deal like that. Versus last year, I had a building under contract downtown LA, but it was a value add, but I ended up walking away from it. It just didn't make sense. When we walked the building, we realized there was like 4 or 5 people living in a 1-bedroom in a rent control market, which there's no way you're going to evict these people. And so, it just didn't make sense to acquire this property. They're paying like $1,000 a month when they should be paying $3,000 a month. So there was no predictability if and when those people were going to leave. So very high risk. So, we walked away from that deal. So again, the opportunity is kind of what leads the particular market. But for me, I'm not only investing in one market. I'm actually involved in a deal in Texas because of the opportunity. I'm partnering with a very experienced operator. They've done hundreds of doors in this particular market. They've done full cycle, acquired and exited. So they've got the strong team, boots in the ground, and so forth. Also they've gotten this particular deal I'm referring to. We were able to secure it off market, so we were able to have a significant amount of equity on the buy. It was just appraised for $2 million higher than what we have it under contract for. So again, when we're talking about market in general, yes, you want to venture into a place where the landlord laws are more, tenant landlord laws are more in favor of you as a landlord, a market where it's growing, where there's job creation, a market where the taxes are lower, but at the same time, the opportunity kind of trumps that. So if you got a solid opportunity, it may end up being in a place that doesn't necessarily come on high on people's lists. You may find an opportunity in like Iowa, Wyoming or something, right? But it makes sense. So that's kind of how I would guide my students. And again, just there's so many opportunities.
Yeah. Follow the numbers and follow the law. Really. I love that. And what I love too, just to circle back right to the beginning of our podcast, when we were talking about investing remotely, the last thing I'd love to touch on is what you just did. And I don't want it to get lost, is how you highlighted the operators on this Texas deal. I mean, they're experienced, they know the market, they've done a lot of deals there. And so I think it's really important to have a strong team on the ground when you're investing remotely, and they have to be knowledgeable about that. So can you just speak to that a little bit more? Maybe who do you really need to have on your team that is local in order to negate some of the risk of investing remotely?
Yeah, pretty much my entire portfolio is basically managed remotely. Besides this one project here in Southern California, everything else is out of state. So I do everything from long distance, either in Canada or in other states. So I've had to figure out how to create the right team and support to be able to be successful from long distance. Having a solid realtor, solid property management team, solid contractors, and lenders are pretty much your power team. Once you've acquired a property, you need the people to manage it and to continue to do the improvements from long distance. But it's all relationships and also the systems that you've kind of implemented. Alternatively, you can partner with people who already have those systems and so forth. That's just a vetting process. You're going to have to do a good job vetting the individuals to see if they are legit, if they've done what they've said they've done. Maybe go and take a look at some of the project that they've been able to to acquire and reposition. But if we're talking about you implementing your own team, I mean, it's going to require, and I suggest people fly out to that market, shake hands, walk the properties, build that relationship, make them feel like you're not like, you're not going to be checking up on them, right? You want to be involved. So for myself, I've got a local my local property management team that's in Ohio, that I vetted, but they know that they're on a short leash. I recently was there about a month ago, and I brought another property manager with me as we walked our own properties. So they know, like, hey, if something happens, I've got backup support. But they appreciate that I came, we walked the property, they show me the progress, and we just addressed certain things in the game plan in person, and we have weekly calls. Like literally this morning, we had a weekly call. Every Thursday, we kind of run through every single property, the progress reports, any issues, surprises. And in addition, I have my own team, my own Ventureco teammate partners involved. So not everything needs to come to me. So we kind of divide and conquer, if you will. Someone may handle more the money side of things, just making sure, the revenues coming in, expenses, and just double checking, kind of invoicing and so forth. I've got another partner who's more involved on the renovations, construction side of things. So again, how you build your business is very important. And it all comes down to, what are your goals? If your goals are to own 50 doors or 1,000 doors or 15,000 doors, right? Every interval is going to require more people. And again, surround yourself around the right people. It takes time. I mean, my partners, that are actively involved in my company, I mean, we've built this relationship over time. There's a give and take. So it's not just like, finding someone and hiring them. I mean, it's really a relationship thing. So again, being able to go out to these markets in person, shake those hands, walk the properties is going to be very important, and having a good system of follow-ups, and just accountability. From pictures, video walk tours, to just a cloud-based system where everything is shared instantly is going to be super important. So that's my recommendation. And there's so much technology out there these days that you can implement different apps and so forth that will just help to kind of like allow you to do more and more things virtual, and constantly network. I don't stop. I'm always looking for other resources people in the markets I invest in. Who do you have? Who do you refer? Who's a good whatever painter, contractor, so forth, right? And just kind of build that Rolodex. And a lot of my students, I give them access to my Rolodex. That's one of the value propositions I offer, because I realize I'm like, it's hard. You have one bad contractor. I mean, it can really hurt you and really, put you back a huge step. So the contacts and relationships in this business is such a huge component. It's definitely something that you're going to be constantly working on.
Again, coming back to the power of community. When you have a community, then somebody inside that community has the answer to your problem. And then if you have a strong community where it's a safe environment where people can reach out and say, hey, I need this or I need that, and it's an abundant community where everybody's there to help each other out, then very quickly those problems are completely negated and dissipated. So again, coming back to that power of community, but you have to build that community. And there's a lot of work in doing that. You have to get out there and start networking and shake hands with people and build those relationships. And I love how you said that, because so many people in real estate are transactional. And then when things go sideways and they're alone and they don't know how to get out of it, and you get hurt. I mean, when you're in real estate, the reality is if something goes sideways, we're not talking about a few $100s here. It can seriously hurt. So words of wisdom brought to you by Thomas Lorini right here on the Let's Get Real Estate podcast. It's been an absolute pleasure having you on the show, Thomas. Lots of great bombs, great advice. If anybody wanted to reach out to you, how would they do that?
I think the easiest way, either through Instagram at Real Thomas Lorini or my website, venturecocapital.com. Just either DM me or send me an email, and it'd be a pleasure to kind of set up a call.
Yeah, and ultimately all of that is going to be in the show notes, guys, as always. So you can always just check it out down there and connect with Thomas. He does come up to Canada quite a bit. He does speak at lots of events up here as well. And so you can always follow him and see what's going on. If you follow him on socials, send him some social media love, and you'll be able to see when he's speaking at certain events or when he's in town, and maybe get to network, reach out, and then get to meet him, and he can be in your Rolodex. So having said that, though, he's always looking to work with people with his company, Ventureco Capital, as well as helping people invest in the States. So if you're interested in doing that and you want some help, just reach out to him. As you can tell, he's a wealth of knowledge. So with that, Thomas, do you have any final words of wisdom that you want to share with people before we sign off?
Action. I think too often we take a lot of information in, we talk a lot, we maybe network, but if there's no action, nothing's going to happen. Your environment will not change without action. So I want to encourage you all watching this. If you are planning or thinking about investing in US, I mean, don't just digest this podcast. I mean, take the necessary actions, take the next step, talk to the next person, one step forward. And then within the next 6 months, 12 months, 2 years, things will happen. I think that's the main thing for most people. They get stuck on something. Don't allow yourself to get hung up on on one thing. There's potentially an answer for that. So I just want to encourage you all to move forward, and your world could be significantly different in 1 year and definitely in 5 years from now.
Consistent action, guys. It's not just action today, but action tomorrow and the next day. Needs to be consistent action. And then it's like building a wall, a brick wall. You just lay one brick at a time, then all of a sudden you've got this beautiful wall in front of you. So great advice. Great advice, Thomas. Appreciate you being on the show, and look forward to seeing you next time you're up here in Canada. And hopefully it won't be too cold for you and you'll stick around for a few days.
Well, thank you, Danielle. It's been a pleasure here speaking with you on your podcast. I've enjoyed my time.
Thank you so much. Well, this is Danielle Chason signing off for the Let's Get Real Estate podcast, where I bring to you real people doing real estate. Bye for now.